Hello traders, before I get going on the video I want to just remind you all, I've been sending out a couple of emails about tomorrow at 6 o'clock, not 7 o'clock but 6 o'clock. I'd like as many Scalper School graduates in the room as possible because I'm doing a really important upgrade on the Scalper School system, and I just want to make sure that you're there. Okay, if you can't be there I will send a recording out, but I'd like you to be there so you can ask as many questions as possible. Alright, now before I get going on the indices, which have had a great couple of weeks, I want to talk about the bond market, the debt market. This is the 5-year US Treasury notes, and this to me is a real concern. If you've got a dysfunctional bond market like this one, dysfunctional from the point of view that it's dropping hard, when bonds drop, interest rates, the yield goes up. So it's a divergent relationship. Price drops, yield goes up, because the yield goes up to encourage people to hold them. Okay, so these yields are creeping up above a big magic 3%. Now that's a key number. Basically what the market, or this market's telling you, is that interest rates are on the way up, which we all know about. Yeah, that's fine. But what this means there's a squeeze on money, or money supply. What you need, this is a daily chart going, I've got 2011 to the latest chart. This is a healthy market. This is a healthy bond market which is supporting a low rate on the $21 trillion, or at least part of the $21 trillion debt that the US state has, which is obviously horrendously high. If you get this market falling out of bed and not holding up, this means that the cost of servicing that debt is going up. So the money supply in the US is potentially getting tighter and tighter, whilst at the moment the markets are keeping up. So I'll come back to that another time. I just want to sort of give you a little bit of a heads up to that. In the meantime, we'll look at the Dow first on the weekly chart. So from this support down here, we have, excuse me, I don't know why it's just suddenly yawned so much. Anyway, I'm sorry for that. We've had a penetration into this support, and now we have a decent move push up. But it's struggling. Here we are in the middle of May, with the earnings season long behind. Well, I say long behind, it's recently behind us. This is very, very late in the season. There's quite a lot going on in the background of the markets, which is of a concern. So where do we go from here? Well, all the time this market is getting bought, then I would obviously want to buy a pullback. But I will be looking at where I think the next drop can come from, because this was a huge big dive. It's taken us a very long time to grind our way out of this. Okay, so this is a low momentum move down here, but nonetheless it's higher, so I'm not going to ignore the fact it's higher, just waving up some concerns for later on. When I say later on, I mean weeks and potentially months, but nonetheless concerns. Right, daily chart is coming right in, just into 50%. Very, very close to 50%. The 50% mark is 24,920. So we are literally about 80 pips off of that 50%. So I would, and this, you can see this stochastic indicator. It doesn't really matter what indicator we've got, but it happens to be stochastic. We are sitting high. We're not extreme, but we are sitting high. So in an ideal world, I would like a pullback to 24,500. Bearing in mind we've got options expiry on Friday, which means there's a lot of money normally hanging on the big round numbers. So if we can come back to 24.5 and then push into 25, that would make me happy. That would be a nice technical move, and that would link up with the weekly chart, because the weekly chart, last week's high was 24,520, so it makes sense to see if we can catch a bid at 24,500, 520 area, and then potentially push up into 5.3 but end the week at 25. Alright, so you can see we are above the trend line. We've come off, it's a decent push. We're actually sitting on the daily 200. If I call this chart in with lots of moving averages on it, you'll actually see that with just this purple line here is the 100 moving average. So obviously that's quite a crucial number. That's quite a crucial feature. And we've got a knot of moving averages here, sitting just above the level I suggested we might pull back to, which is 24.5. If we pull back to 24.5, in the meantime, these moving averages should have crossed, turned up, and come down to meet that 24.5, hopefully. Now it could be we don't come down there. That's just a hope in a way. If we come down to Friday's key pivotal level 24.7, 128 pips away from it, who knows? We may only just make it down to there and push higher. If we close under 24,700, then that's a sell signal. So I'm not trading Monday. I wouldn't ordinarily trade much Monday anyway, certainly not this Monday. I'm actually going to a neighbour's funeral. A neighbour we knew very well, sadly passed away, so I'm going to be out from early morning to late afternoon and come back, just finalise anything to do with my Scalp School presentation, and then get ready to meet you in the room for that presentation. Okay, so let's look at last week's 60-minute chart on this, because this is going to cover some of the things I'm going to be talking about on 6 o'clock tomorrow. So we came into this market with last Monday we came to this market with all this buying. So a little bit more buying into Monday, and we drifted lower, started to see quite a lot of red on the chart, and then pulled back into actually the 200-day average on the 60-minute chart, held the 200-day average down there, and then started to wave up again. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1, 2, 3. For those of you not familiar, I've just done a Elliott wave count. And so this was the 127 extension. We got there on, I think we got there on late Wednesday, dropped back on Thursday, retested on Thursday, and then finally actually broke up through the 127 extension on Friday and closed above it. So it's a decent close, but like I said, let's just be patient. So take everything away, and you will see that that trend line held right throughout the week, and that trend line was created on that low of Tuesday, very late in the trading day on Tuesday. Okay, so I will now update that trend line. Where am I going to put it? In actual fact, I'm going to have to keep that trend line because there's no other trend line to do. So I will put that one up there, that trend line there, and let's see if that comes into play. So we already came out the bottom of this little channel, so I'm just looking for this to fall out of that bottom of that channel early part of the week. I'm going to take that off because and then I'll start to look at that on Monday. So after we've done the Scalp School presentation, I will do an update on the intra-week picture and the bigger picture. Right, so that's where, notice last week, where are we? That was the close on last week, so we didn't spend much time underneath that last week. So watch out for that kind of signal, because that was obviously a very bullish signal. And that is the fibs on last week's price action. What does that tell me? That tells me that 24,530, would you believe it, that's what we've been talking about, is a key level of support. So if we do break down here, that's what we need to watch out for. And then if this zone holds, that is potentially a buy area, assuming we get down there. We can see there's already a lot of congestion up here. So we've moved into congestion. So if we fall out of 24,800, which of course we're only 24,837 on the close, start closing underneath this 800, and we could tumble back here before we find some support. So we've got support at 600, support at 535, and then we start to see the major sort of fib zone kick in at 450. Of course, the whole flip side of that story is that all changes if we start opening and closing above 876. Now, whether that is on Monday or Tuesday doesn't really matter, but whichever way we sit on last week's high is critical, and whichever way we come out of this zone here is critical. Okay, let's have a quick look at the DAX. By the way, there's not a lot of data this week. We are relatively quiet. Start looking at the weekly first. We're right at the top of this fib zone. So we've had a pretty good run. It's been grinding higher the last few weeks, and you can see this 13,000 is crucial. We need to start breaking up there to see if we can get back up to these highs of 13,550. I mean, last time we got up here, this last pattern we had a pause here in mid-October, and then we had a good couple of weeks. So with all that congestion, it's possible that we have a pause, but in the meantime I would look for 12,800, 850 to see if that can get a leg through that. So might see some early weakness in the first half of the week, and then let's see if we see some bullishness in the second half of the week, assuming these markets are going to follow through on all of this bullishness from this week. So there's a little channel we had last week. There's the Friday close from the 4th, and there's the push. So this week's close is up there at 988, and the fibs for the week is there. Okay, so again, what does that suggest? That suggests that 50% is down there, which was Thursday's low. So I would suggest if you're a DAX bull, look for 900, 930 to see if we can then close the week on the big number or make a run for it up these extensions. The trend line is actually quite nice and clear on this. Very nice and clear. So that's the key uptrend, which we've actually since broken on Friday. And there we have potential for that to get back up to 13,100. while staying within that trend line. Any sell signals and closes under 13,050 could cause problems. A quick look at the pound, and then I'm going to leave it there. Daily chart is attempting to hold here, and you can see how important the level is because we broke up here January 18. Interest rates were not raised, but the market did not sell. In fact, we really flat for the week. Where's the weekly chart? Yeah, so 3 weeks of selling, one marginally higher close on a key fib level. So we'll talk about that on Monday. Basically, whichever way we close out of this area here is going to be the direction. Right, I'm going to leave it there. So let's see what Monday gives us. There, I've talked about pullback areas for DAX and Dow, and the look of that pound. See you on Monday, and let's take it forward from there. Thanks, bye for now.